the big story today, and the interest rate hasn't been this low for more than half a century. Today, the Bank of England slashed another percentage point from the base rate, taking it to 2%, amid signs that the economy is heading for a deep recession. The cut comes on a day when thousands more job losses have been announced, and new figures show a further fall in car sales and house prices. More on that in a moment, but first, Richard Scott on today's interest rate cut.
We haven't seen interest rates this low since the 1950s. In fact, 2% is the joint lowest point we've seen for interest rates since the Bank of England was formed in the 17th century. Now the threat of a severe recession has prompted the bank to cut rates by 2.5% in just 2 months. Today we heard house prices fell more than 2.5% last month and that car sales have plummeted. Many economists think more cuts could be on the way.
Well, the bank doesn't want to spook the city, and the city was expecting something in the region of a percentage point cut. That's what we got. I think looking ahead, we're going to see more decisive action from the bank, and I would see rates falling perhaps another percentage points over the coming months to a 1% trough.
The hope is that cutting rates will reduce the financial pressure on people and encourage them to go out and spend. Someone with a £100,000 mortgage could save around £70 a month from today's cut. Normally, we'd expect anyone on a tracker mortgage to benefit by the full amount, but this time, things are different. Some building societies, of which Nationwide is by far the biggest, have a feature in their tracker mortgages called a floor. Now this means when bank interest rates go below that floor, the tracker mortgage no longer tracks, which means customers don't get the benefits of interest rate cuts. Nationwide's floor on most of its tracker mortgages is 2.75%, so for hundreds of thousands of customers, most of today's cut won't be passed on.
I think where lenders can pass it on to borrowers, they will, but actually the moral obligation to the very many savers who rely on investment income, charities similarly, they're going to want their savings rate to be kept up, and indeed for economic purposes we want savings rates to be kept up to encourage savings, because it's the savings money that can be lent out next year.
Brian Boardman is one saver who's worried. He relies on the interest from his savings to top up his pension and says he's being squeezed between rate cuts and inflation.
Well, up to about 2 months ago, there wasn't really a problem. We could get rates that would give us about a 2% real return. Now we're finding it very difficult even to get anything that keeps pace with inflation. In fact, I reckon that shortly we'll be 2% down on our real income.
People now, including a team at the BBC, will be watching closely to see how much of the cut is passed on to savers and borrowers, and how quickly. Richard Scott, BBC News.
Well, let's get some reaction from the High Street. Our correspondent Fiona Trott is in Birmingham. What are they saying there?
Well, shoppers here in Bearwood High Street, Sophie, say that 1% just isn't enough. They say they're already feeling the pinch and today's decision won't make any difference to the way they spend their money. So what does that mean for businessmen like Arijit Nandra, who runs this electrical appliances store here in the High Street? If they're saying they're not going to be spending any money over the next couple of months, what does the future hold for you?
Well, it just shows how much the consumer confidence is low, but this should help. I mean, this 1% cut should certainly, it'll take time to monopolize, but hopefully it'll bring back the confidence for these consumers.
So maybe you think it's just because it's happened before Christmas that people are still a little bit wary?
Absolutely. It's just, the confidence is so low at the moment, people are sort of very wary on spending their money.
What have you noticed? What kind of things are they buying now compared to what they used to buy when they were feeling a bit more confident, if they're buying at all?
Well, what we are finding is that certainly the higher end value items people are not spending their money on. The budget price and middle of the value items, we are certainly selling those, and people still need their washing machines and still need their fridges and televisions.
Thank you very much for joining us. Well, another businessman we've spoken to here in the High Street says that he's been forced to sell up. He won't be here in 2009. The shops that are doing well, though, are the charity shops. They've told us a lot of people are going through their doors because they're still looking for a bargain. Sophie.
Yeah, thank you very much. Well, we certainly got more of an idea this morning of just how deep a recession could get. The Halifax says in November house prices saw their biggest monthly drop in value